Hello everyone and welcome to today's daily analysis. This is the 10th July 2024. So for today, the US dollar showed a slight recovery, reaching 105.20 on the DXY index. This uptick was influenced by recent comments from the Fed Chairman Jerome Powell, who indicated a cautious approach towards rate cuts in the near term. Last week, the dollar had weakened due to poor U.S. economic data and Federal Reserve statements, despite a positive surprise in the U.S. non-farm rolls, which rose to 206K from the previous 190K. This figure remains below the 6-month average of 222K. Job vacancies are also decreasing, suggesting a softening labor market. Looking ahead, the focus this week will be on the U.S. Consumer Price Index report on Thursday and Powell's testimony before the Congress on Wednesday. If Powell maintains his current stance and CPI data continues to show weakness, the U.S. dollar could face further pressure. Market sentiment is leaning towards expectations that the Fed might cut rates in September due to signs of economic slowdown and potential deflationary pressures. Technically, the US dollar index started the week at 105 and have seen bearish momentum with the 14-day RSI indicating a short-term trend. A bearish evening star pattern on the weekly chart suggests further downside potential. The support levels are noted at 104.5 and 104.43, while the resistance level stands at 105.25 and 105.52. These technical indicators suggest a cautious outlook for US dollar in the near future. And then for the WTI spot crude oil, the oil prices fell as concerns over Hurricane Beryl supply impact eased. Investors await Fed Chair Jerome Powell's hints on rate cuts. This week focuses on US and China CPI reports. WTI crude slid on Monday due to reduced supply disruption fears from dissipating Tropical Storm Beryl. Extended Friday dropped to $81.6. The US inventories fell last week, briefly lifting prices. The market doubts OPEC demands forecast amid global demand shifts. Technically, the WTI oil prices have fallen below key levels such as the 200-hour exponential moving average at 82.14, testing support at 81.5 and 81.81, 23.6% Fibonacci retracement level from 72.62 to 82.65. A further decline could target the cyclical level of $80. Last week's attempt to break above 84.65, the recent high, failed, leading prices back to lower technical ranges. Looking ahead, if the WTI oil prices stabilize above 82 to 81.81, there could be a potential rebound towards the double top near 84.5 to 84.65. The gold prices around $2,360 per ounce held steady amid a dollar recovery. In Asian trading Tuesday, the gold attempted a modest rebound, defending the 2,350 support level. The rally was supported by a pause in the dollar's rise and lower U.S. Treasury yields. Investors await Fed Chairman Jerome Powell congressional testimony for clues on rate cuts, expected to reinforce a dovish Fed stance. A weaker dollar and Treasury yields could also push the gold above $2,400. Powell speaks Wednesday before the House Financial Services Committee. The gold dipped Monday on profit-taking and Chinese demand concerns after falling below $2,400. The short-term technical indicators show potential for further gains if buyers breach $2,393, aiming for highs near $2,450. The support levels are at 2350 and 2340, with deeper declines possibly below 2,300. And that is all for today's daily analysis. Thank you for watching and have a nice day.